Brett, you've just clicked over 30 years in small business accounting and tax. What's the one thing a small business owner should know every morning before he or she puts their key in the door?
Well, the one bit of information I've always tried to get my clients to know, understand and articulate is the cost of turning that key. Each day when you go there, and given there's about 250 work days in any year, when you open the door, what are your fixed costs for that day? What are the costs that don't move according to the level of your revenue activity?
What's some of the limitations of business reporting for a small business owner?
Look, at the moment we do our reporting as has been done for 400 years, where we have revenue as one line and then we break down all the expenses into detail, and a lot of those expenses are fixed and the owner of the business can do nothing about them. Things like rates, taxes, printing and stationery. Quite often they're not material items. We'd like to see it turn round where they're condensed and by all means minimise them, but revenue ought to be broken down well beyond one line. Even if it's not in the formal profit and loss statement, then the owner should have the revenue pulled to pieces, dissected, analysed. Trends such as changes in segment, geographical sectors, changes between men and women, changes between postcode, changes between age demographics, and look carefully at what's changing in your business. And unless you pull your revenue to pieces, you don't get a handle on that. We've always said that you can't manage what you don't measure. So let's measure the data, let's pull it to pieces and analyse it and see when we get some useful information for business decision making.
Excellent. Small business reporting, or also known as SBR, can you tell us about that?
Yeah, it's coming, whether we like it or not. For many small businesses, the government is now moving towards a standard format so that Commonwealth reporting will be used across all their platforms. There will be a standardised way of setting up your financial accounts so that it just drops straight out of your financial accounts into the government reporting. Right. It's going to mean that you're going to need to standardise charts of accounts, and that your accounting system will have less flexibility in the formal compliance side, but you will have more flexibility in how you get it in there. So for clients, they need to start thinking about SBR now rather than when it's mandatory and imposed on them without the time to restructure their reporting systems.
So we're moving into an era of cloud computing. What's the opportunity, or where do you think cloud computing is going to take small business?
Well, for the first time in history, we've got the ability to have live data between client and accountant. So now we can get up and at 9:05 in the morning, we've got what the client's got. And in a lot of cases, it's already coded from the day before. So we're not dealing with things 9-10 months after the end of the financial year, and if you think the financial year going from July to June, you hand your books to your accountant in December, then you're really in some cases dealing with data that's 18 months old. We're now dealing live day to day, and that means that the clients are in a position where they can talk to us and we can advise them on what they should be doing, but also we can more closely monitor some of the key drivers of their business and even plan for tax. I mean, no one wants to pay tax, but you've got to provide for it.
And what's your position on tax minimisation?
Well, as I say, no one wants to pay tax. I mean, they're not doing a good enough job of spending it. You want to really give them any more. But there are rules, there are regulations, there are requirements. It's a necessary part of business. Minimise it by all means, and we'll do everything within our power to legally minimise it. But at the end of the day, you've got to provide for it. And if you've got a business, particularly one with seasonal or volatile earnings, it's important that you know what your tax liability is at any point in time, so you neither pay too much nor too little. We're now trying to get clients on a quarterly basis so their tax liability is calculated at the end of the quarter and things are back under control.
How important for a business or a small business is the structure? And we see this a lot of times where a business starts off and they start with a particular structure, and it may be a last minute thought. They don't seek appropriate advice. What would your advice be to a small business starting out with regard to its business structure?
Well, get it right from the start,
Yep.
Or at least if you're not going to get it right from the start, have a transitional plan. So quite often we'll have people say, look, I don't want to spend the money setting up a company. Well, we question that most of the time, but if you're not going to do that, at least have a provision that, say, the following 1st of July, you're able to jump into a company. We'd always say they're better to set it up right from the outset, particularly in terms of asset segregation. You generally don't want appreciating assets and trading in the same entity. General rule, but generally not. And sometimes once the thing's up and running and flying, it's too hard to pull it to pieces. You really have to get it right from the outset.
Yeah, that's good advice.